Good morning. Today is Saturday. It is 8:30 in the morning on August 8th, 2020. Today's session will be titled Can Beaten Down Names Give the Leaders a break, a needed break? And you'll see what I mean by that when I show you some charts. We're going to hit the charts, no real introduction or anything like that. We want to get to the point quick, give you our quick thoughts so you can have a good weekend and rest. So let's hit the charts. All right, here is the weekly performance on the indexes. So what do you first notice? What do I first notice here is that the Russell 2000, which has been a big lagger this year, actually, let's show the year to date on, look at this. I mean, huge outperformance between the NASDAQ, which is basically tech companies, and smaller companies. So we need to see, in my opinion, and again, none of this is for informational purposes only, not a recommendation, but look at the divergence, the difference between these different indexes. That is significant. So in my opinion, for us to go higher, we need to see a lot of the companies that are in these areas get a bid. And who would have thought realistically we would be here this significantly up on a recession year? I mean, it's nuts. But let's go back to the week to get to the point. This is a good rotation. Still, the NASDAQ is still hanging in there. We're still doing okay. But here's where I stand. I'll be candid with you. For most of this week, had about 35% invested, reduced positions in the Qs, which is the NASDAQ. And here is why. I mean, it actually worked out quite well. Not the 1 month, sorry, the intraday. So under the table, under the hood, we're getting a little bit of a breather in the NASDAQ. What are we seeing? A rotation into the kind of the beaten down names. People are looking for alpha, saying, where can I buy? And so the comeback trade is starting to really start to get some depth behind it. And so this is not a bad thing whatsoever. But I, on Thursday, started to add to things like mid-cap names, small-cap names, some beaten down names. So Friday for me, candidly, was a red day because I still have about 50% of the portfolio in tech. So while I did add a lot to these areas, I'm still a little bit overweight here. And so that I have some decisions ahead as to whether to keep adding to the small caps or whether we're just overall in the market a little bit hot. And that's kind of where I stand. Is the market is in general very, very hot. It could go a little bit higher, but I want to show you some things as to why I have my gas, I still have my foot on the pedal. We still want to get gains, and it was a positive week. So for us, it was basically like a 0.85% up week for most clients, which is lagging the indexes a little bit. But again, I only had 35% invested. Now I have a little bit more invested because I shifted and diversified into some beaten down areas. So the 1 week you can see we were lagging, and I'm okay with that. My goal during this time is to not get killed. Good asset managers are able to prevent a big portion of the loss. And I am very, very bullish. I want to make that very clear. I'm very bullish, but a lot of the signals I'm seeing it's like this is running really, really hot right now. Take some gains. If it goes down 3 or 4%, get in those names. And this interests me. I mean, when I see, we're starting to see this was much lower intraday. We'll show you that. The NASDAQ was much lower today. From an ETF perspective or from a sector perspective, you can see we are getting that rotation. Still, technology did well, but you're getting into some of the beaten down areas that had a good week this week. So we are seeing a rotation. I'm very well aware of it, and that's why I rotated on Thursday to get some into that area. So what I want to show you is a few different charts that we continue to show people and clients. But here's the deal. This is the value versus growth ratio. Clearly value has just gotten spanked by growth. That's been very, very clear. But can we get more of an upswing, like something like this? That's what I hope happens. That's, in my opinion, that's where we see the indexes go higher. You know, we need to really see, in my opinion, a little bit of a break in technology. And we are starting to see it. I mean, this interests me when I see the watch list with some of these names. It's bringing it up when I see some of these names like Chewy. This was yesterday. I mean, these are huge moves for a lot of these momentum names. So like Alibaba, the Chinese internet names, CrowdStrike. I mean, these are it's funny. They're favorites of the market on dips right here. I mean, these are the first areas I buy on dips. And so do we need to see a little bit lower? That's the difficult part where we stand. So with basically 65% invested, I don't want to really add too much more because we are running very, very hot. So despite it showing the index as being good, which is why you diversify, things under the table are a little on edge. So I want to make sure you realize that, like, under the hood, there are some concerns. Despite you seeing, you know, the S&P 500 being up barely yesterday, this is really, to me, the story. We are getting a rotation. Can it last? Which is what I'm showing you here. It has started. I hope it's not a fake out, but let's look at the indexes now, because that's really important. If I were to show you now the QQQ, which is the NASDAQ 100, you start to notice it can ride the cloud, which is like this bluish cloud that you're seeing here. It can ride that for a long time and be fine. And we are riding that. However, it does concern me once we start to get into an RSI of about 70. It's not an immediate sell, but it's just kind of a, hey, be careful here. And we touched that and bounced down. Now, if you look at the intraday, I mean, it was ugly. We were down almost, I think at 1.2% on Friday. So I know the market is on edge. I'm watching closely, but usually after, 9 to 11 days of upswing like this, you see a pullback. It's kind of consistent. And so that's where I'm kind of on edge to say, can this go higher if value gets a bid? And so that's where I stand, is I added some to value in case we go up, and that worked out well. Friday was a red day for us. I have no problems admitting that, because we still have a lot in tech, and we have a lot in this ETF as well, which is a momentum area. And so when I start to see this area not do well or just have a little bit of a pullback, it's a little bit like, do we need more of a breather? So I'm very realistic on that. I want to make sure people understand that. Like, I see the writing. Yes, we are overbought in areas, but this can continue in midterm. I think we go much higher, but it will come with the normal pullbacks. So what I'm interested in Monday is, will buyers come in and buy this dip? I mean, look at all the times it hit this gold line, which is the 20-day moving average. Buyers came in. That's the same thing that happened, but it was ugly intraday in this. I mean, that's a big move. This was down almost 4% at one point yesterday. That was not fun. I'm glad I didn't sell, but we could be getting closer to a period where we just need to see a test of the 50-day moving average. And so I want to make sure people understand, like, hey, the next couple weeks could be kind of ugly. I have a lot to be able to add. And if I see, if this gets broken, I probably will back off again. But stimulus talk is kind of keeping us in the game at this point. I hope it's not a sell the news event, but I want to make this very clear. This is very important. Do not freak out, because I do believe on any of these significant dips, it will be bought hard. So hang in there. It's not going to be fun. I realize that things got hot. Like, anytime it gets close to 70, it's kind of a, hey, be careful out there. even on small caps, so IWM, we're running a little bit hot. Like anytime we've gotten out of the cloud like this, it doesn't mean bad things happen. It just means we're due for a little bit of a pullback. And I think that does happen. But in case it doesn't, in case this, maybe this becomes a priority where the market views this as finally we break out and this could go higher, which is why I added some and that worked out in IWM and mid cap areas. So just want to give you that exposure. A couple more charts that I am definitely watching is the put call ratio on Thursday at the close. The put call ratio is 41, and that basically means the market is very, very complacent, not putting a lot of protection on, a lot of calls with no protection. So it did close a little bit higher, which is not a bad thing. Basically, people got a little bit of a scare because many people are still in the momentum names, and you're seeing like on a day like this, it can go down 4% like that. And so protection was added. I would like to see this. I want to see more than a 2-day dip to see how the market responds, to be honest with you. So overall, I want to remind clients specifically, because I'm starting to hear this a lot, quite often. If the President Trump does not get elected, or if Biden gets elected, or vice versa, I want to sell everything. Rule number 1 of investing: do not bring politics into investing. It brings emotion in, and it's not a good idea. What I promise to you is I will watch price action and say, how does the market respond to one of those events? Either President Trump becoming president or Biden becoming president. We're going to watch price action and take our opinions out of it. Because sure, there will be volatility, but you have to remember the same opposing idea is thought by someone else. So they might be buying while you want to sell. So take emotions out of it. That's just kind of a quick disclaimer, because I know we're getting closer and I'm starting to hear this and say, what do you think is going to happen during the election? I have no idea, but I'm going to watch price action. If I start to see certain key levels broke, I'm out regardless of what my opinion is, because the market is and price is the telltale. So I hope that helps and makes sense. So in short, we have about 65% invested. We are well diversified. And if we go up, I want to participate in that, but I'm okay to lag in performance a little bit because we're a little bit on edge here. What I hope happens on Monday is that some of these names get a bid. And if they don't, we probably need a pullback. So I would like to see the momentum names get a little bit of a bid, which truthfully, this is why my performance was not great yesterday. I have a lot in these names still, and I'm trimming those names as we were on the way up, but still you get hit a little bit on something like this. It's a great fund, but normally I am buying names inside of this ticker. So got to be very, very careful here. I'm well aware of the signals that are concerning. Let us know if you have questions or concerns. I am okay with this week lagging in performance. It's not fun, but usually when I see these signals, I'm a little bit, hey, back off risk. We can add again later on dips. So hope that makes sense. Hope you can understand where I'm coming from, and hopefully you can understand why I'm trying to protect capital. Most clients are positive year to date, but below the February highs, because January and February were huge months for us because we were in momentum, and that's what did well in January and February. So hang in there. Let us know if you have questions. We're here for you. Thanks again.